3 years of investing, gone in 21 days. Your finger hovers over the sell button. The numbers on your screen, once meaningful, now show a devastating loss. 3 years of contributions, 36 deposits, hundreds of market days, all vanished in 3 weeks. Your next 72 hours will decide if you ever achieve wealth. 8 out of 10 investors sell at this moment. The other 2 don't, and they become wealthy. The difference isn't intelligence, timing, or luck. It's something rarely discussed. We'll revisit this critical moment, your finger poised over the sell button. But first, to understand why most fail here, we must see their journey. By the end, you'll know your investment level and if you have what it takes to survive the ultimate test. You'll discover the moment that defines your investor journey for life. Level 1, $100. Your first investment. You open the app multiple times, your finger hesitating before pressing buy. It's not about the money, but a realization: this isn't a transaction, it's a switch. You transition from consuming wealth to owning it. This is the crucial line every wealthy person crosses, often remembering their very first stock purchase. You check the app constantly that first day. The numbers fluctuate, up $1.40, down 80 cents, up $2.10. Yet, none of it truly matters, you just need to feel invested. A mere $100 won't make you wealthy. The next decision is critical, and it's where most people make a crucial mistake. Level 2, $500 a month. You set up an auto investment, same date, same amount, same account, forever. You set it once, then forget it. The money leaves your checking account before you can spend it. You don't make a monthly decision, you made one decision once, and it continues to execute itself. Here, wealth ceases to be random. The market climbs, your shares accumulate. The market crashes, and your shares accumulate even cheaper. The news screams it's the worst time to invest, but your contribution still hits on the first. The news then flips to optimism, and your contribution still hits on the first. You stopped reacting and started executing. Automated investors typically outperform those who constantly wait for the perfect moment. This is the boring habit the wealthy protect. After 2 years, your portfolio hits $10,000, and the real test begins. Level 3, $10,000. You expect to feel something, but you don't. You did everything right, 2 years of contributions, never missed a month, never panicked, never sold. The number on your screen feels small, even embarrassing. It feels like 2 years wasted. Your friends buy new cars, cousins put down payments on houses. You watched your screen grow from $0 to $10,247 over 24 months. The math feels insulting. If you're at this level, listen carefully to the next sentence. The boring middle isn't a failure, it's a feature. You start questioning everything, maybe the wrong fund, maybe you should be trading instead.
Maybe YouTube crypto gurus were right. Maybe you wasted 2 years of money you could have enjoyed. The voice in your head sounds reasonable, as it always does before a mistake.
60% of investors quit here. They don't lose money, they just stop believing the math will pay off. They cash out, convincing themselves investing doesn't work.
5 years later, they watch their abandoned fund hit unbelievable numbers. This is the quiet level nobody talks about, because its silence is the hardest thing to survive in investing.
Survive the silence of level 3, and something shifts. The market gives you a violent test, not a slow one. How you handle it decides everything. Level 4, the market crash. The market drops 8% in a single day. You tell yourself it's a correction, something markets do. You've read about it, so you stay calm. Day 14. The drop accelerates, down 22% from the peak. News headlines worsen. Friends discuss it, family asks if you've sold yet. TV advisors warn this might be the start of something bigger. Day 21, down 40%. Your 4-year portfolio just lost 18 months of contributions. You're no longer watching numbers fall, you're watching time disappear. You open the app, finger hovering over sell. Everyone is selling, headlines warn of worse to come. Your spouse asks why you haven't pulled out. The voice in your head, calm and reasonable, urges, save what's left. Get out before it worsens. You can always return when things stabilize. This is the moment. The next 30 seconds decide if you reach level 5. 80% of investors sell during the crash, turning paper losses into permanent ones.
They turn a temporary drop into a permanent loss, believing they were smart. The 20% who don't sell aren't braver or smarter, they simply didn't move.
This is the moment from the beginning, your finger over the sell button, portfolio down 40%, the voice urging you to save what's left.
Wealthy investors don't survive crashes by being tough. They survive by making one decision before the crash. They decide in advance that they won't sell.
When the moment came, they didn't think, they just followed a pre-made decision. If your finger pulls back, if you don't sell, you've passed the test most people fail. On the other side of that test is something new. Level 5, $100,000. You logged in expecting a small move, but your portfolio moved more in 1 month than your contributions did in 6. Your money made money while you slept. You open a spreadsheet, running numbers forward. Your 10-year projection, based on current contributions and market returns, is an insane figure you can't say aloud. The math is correct, you've checked it 3 times. What if your money made more this month than you did? This is when investing stops being theoretical. Before this, you bet on a system. At level 5, the system bets on you. Remember your finger over the sell button, the panic, the voice saying it was over. The version of you who held that day is why this number exists. Level 5 isn't a reward, it's a receipt. You tell no one, not friends, not family. Announcing $100,000 to non-investors sounds like bragging about something they don't understand. So you keep it private, let it grow, protecting it like something you almost lost. But $100,000 isn't the end, it's where a new game begins. The strategy that built this wealth is about to start working against you. Level 6, $250,000. Your old strategy is no longer enough. At lower levels, mistakes cost hundreds. At level 6, mistakes feel like something more. They feel like lost years, costing more than lost money. A single tax mistake erases 6 months of returns, over-concentration in the wrong sector erases a year. The unseen clock keeps running. You hire your first real CPA, not just software, a professional who knows your situation. He charges $4,000 but saves you $14,000 in his first year. You learn things you should have known years ago, tax loss harvesting, asset location, and why certain accounts get specific investments. Each lesson costs what early knowledge would have saved. Here, most level 4 survivors lose money for a new reason, comfort. The strategy that built your first $10,000 will destroy your first $1 million. Buy and hold works at level 2. At level 6, you need allocation, rebalancing, and risk management. Investing shifts from doing to managing. Survive level 6, and your money starts paying you. Level 7, $3,800 hits your account on a Tuesday. You didn't work for it, you didn't earn it through your job. Your investments paid you. This month, next month, every month. You sit at your kitchen table on the 1st, as rent and car payments automatically come out. Your electric bill, phone bill, groceries, for the first time, all paid by your portfolio, not your paycheck. Your portfolio now covers your expenses. You stare at your bank account, realizing you haven't spent your salary in 30 days. For the first time, your job feels optional. You don't quit, not yet. But for the first time, you understand you could. The fear driving financial decisions for 20 years quiets. You make decisions differently when employment is a choice, not survival. The moment your investments cover all expenses, your life splits, the version needing a paycheck, and the version that doesn't. Freedom isn't the final level. There's one more, where the system itself treats you differently. Level 8, $1 million. Financial institutions treat you differently, proactively. Your banker knows your name. No more waiting in lines, you're escorted past the ropes where others stand.
The same line you stood in at level 2 with $200 in your account. Now, deals come to you. Exclusive investments, inaccessible before, appear in your inbox.
Private placements, pre-IPO offerings, real estate syndications. You stopped seeking opportunities, now opportunities seek you. At level 1, you searched for hours to buy a stock. At level 8, a stranger emails you a $2 million deal. People treat you differently, leaning in when you speak. They ask life-changing questions. Energy shifts in rooms you enter, and you realize why. You remember what you have. The system that charged you fees now waives them, unprompted.
The same institution that put you on hold for 40 minutes now answers on the second ring. Nothing changed except the number next to your name. Remember the moment your finger was over the sell button.
The version of you who didn't sell built every door that opens here. At level 8, the market doesn't change your life anymore. Your money changes the market.